All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you for joining us. If you're just joining us, if you want to get to know me a little bit better, hopefully you do. It's at Scott the Cow Guy on Twitter. That's where I post everything that is pertinent. At Scott the Cow Guy on Twitter. Love to see you there. Let's take a look at what the corn market's doing here today. It's been easier all day. Well, not all day, but it's been easier as of late. It's coming back a little bit right now. Sup corn's only down 4. That's 601 last. We've got D's corn only down a penny at $6. There you go. We have a 6 in front of it. All the way across the board. That's good to see. D's is up to $6 even, up or down a penny. Down 1 cent, $6 even. All right. Moving over to the soybeans. They were off as well, but not as bad here. August off 10 cents, 14.61 3/4, while sup is off a nickel to 13.54 3/4, and new crop, no, is off 4 cents, 13.37 even. All right. What do we want to say about wheat? Wheat in Chicago wheat. Let's bring that up. That's going to look like this if we get that. Yeah, there we go. September, down 19.25 cents. 7.75 3/4 is last. We've lost that $8 handle. Go out the deferreds. Say, let's go to May. 17 cents lower there. 8.20 1/4, and we're well off the lows by about at least 11 cents. So nothing too, not a lot to worry about there, but still down double digits on the day. That's going to hurt. How about hard red wheat in Kansas City? Again, down double digits. We've got that sup off 16.5 cents to 8.32 1/4. That's still about 12 cents from the lows there. We have been much lower. May's off 19. Wow, just ticked 13 3/4 cents lower. That's a big. 8.49 even is last. And again, that's about 11 cents off the lows. Let's see what spring wheat's got for us. It's going to be a little bit easier as well. 11 1/4 cents. Let's go 12.5 cents lower in SEP. 8.98. May's off 11.5 cents to 9.29 1/2. And again, those are around 2 cents off the lows. And then finally, let's go over to cotton. It was limit up. It still is in that D's contract. 500 points higher to 88.71. And we've got limit up in March and May behind it as well. Let's bring in our next guest analyst, Todd Horowitz. He's with Bubba Trading. Thanks for being on the show here. Todd's joining us from Las Vegas. Okay. Well, I just read off to you a lot of prices. I mean, when are we going to see the hot and dry sneak into these prices?
You know, Scott, it's really amazing when you look at the data that we've been seeing from the PPI and CPI, and everything points that things should be much higher. Yet there's pressure, but we're in that period of time where fund money is pushing these around right now and trying to force some shorts. And I think that they eventually will get it stuck to them. But at the end of the day, right now we're going lower, and wheat's in danger. It was just about breaking down from a key level. It has bounced a little bit off of that. I think we're going to see much higher prices. I mean, I know I say that all the time, but it looks like we should be higher. But right now, when you have thin markets, it's easier to try to push. And I think that the fund money is overwhelming the demand right now.
Well, we definitely have seen the markets trade a little differently as we've had a lot of outside money come in, and a lot of it has exited as of late. Maybe we're going to get back to a more normal trade, but I know that we continually visit people around the country, and more often than not, whomever we're visiting is telling us it's really hot and dry, and everybody's waiting for that to kind of show up in these prices, and they trade kind of lackadaisical and almost carelessly right now. In the meantime, we've also got the economy melting down around us, so could be a tinderbox and just waiting for it to wake up and see,
I think it is a tinderbox. Look, I think there's a lot of issues here that we can certainly see, and I think you're going to see those prices show up. When you have thin volumes, you have the ability for fund money, which has been churning back and forth, and they're trying to develop and force even maybe some bank action now, and to create some forced selling. But I think that's going to pass, and I think that demand will overwhelm the actual pricing here and make us go higher. And I think that's what you're really looking at. The economy is in very, very sad shape, despite what the stock market is doing today and how it's recovered the last couple of days. But overall, I think there's a lot of issues here that we continue to ignore, but that's been pretty classic right before we get the big move in our favor as far as the grains go.
All right, I agree. All right, stay right there. We're going to go away, digest what you just said, and then we're going to come back and talk more about livestock with Todd Horowitz and Bubba Trading after this. All right, thanks for coming back. This is Market Day Report. I am the Cow Guy, and Cow Guy likes live cattle. That's a cheap segue, which I will use right now. Let's take a look at live cattle as we sit here. The Chicago live cattle are just rolling over a little bit. August is off 70 cents to 134.70. Okay, that's a nickel off the lows. I mean, these are just, everything seems to be trading heavy. Let's go out to, say, December, 145.37, and that's about, I don't know, 15 cents off the lows. So that's down 92 cents as well. We've added a little bit to the losses here, but just kind of quietly slipping lower. All right, how about that? Let's take a look at feeder cattle. Sorry, feeder cattle. Well, let's look at August. $2.75 lower, adding to the losses. 176.15 is last, and that's about what, 7 cents off the lows. Let's go out to, say, November. $1.37 lower to 183.82, and that is one tick off the lows. So again, feeders trading heavy as we go into the last few hours here, last hour and a half. Lean hogs. Let's say August is up 35 cents, 109.92. And then we have the rest. The deferreds are all off here. Ox off 67 cents to 92.67. And then if you go out to even D's, off $1.02 to 84 even. All right, let's bring in Todd Horowitz again. Thanks for waiting in the wings, Todd. He's with Bubba Trading in Las Vegas. You got anything you want to get off your chest when it comes to livestock?
No, he ain't heavy. He's my brother. I mean, I think that livestock we just had a nice little pop to the upside, and you're seeing some natural profit taking and some selling here. They fit into the same category with grains with very lackadaisical trading in these markets. But remember, we're up near the highs in cattle. Okay. And certainly, I don't know that we have a lot of room to go to the upside. I don't think that there's necessarily room to go to the downside. I think we're kind of in that fairly priced area based on all the factors around us. And hogs, I think, are in that range. The hogs are in about a $6 to $7 range, top to bottom, up and down. And I think that's really where we are. I think the danger in livestock is to the downside, but I don't see we're going down so fast. The real key here will be, I think, the cost of fuel, the cost of oil, and if we get too much outside expense, if it stays moderate or stays where it's at, I think we have room to go a little bit higher, but I don't think we're going to see a big explosion from here in livestock.
All right, great stuff, great content. Todd Horowitz from Bubba Trading from Las Vegas. Thanks for being on the show. Have a great weekend, Todd. Bring it back to Nashville so I can throw it over to Suzanne again.